If you're flat out, if you're working long hours, and you're still watching your bank balance bounce around like a yo-yo, this video is for you. Because here's the truth. Most business owners learn the hard way. You can be busy and still be broke. You can have sales and still have no cash. And you can have a successful business on paper while living week to week in real life. Hi, I'm Phil Bajura, and today I'm going to show you 5 powerful levers that can improve cash flow and profit without making or working longer and harder. It's not theory and it's not fluff. This is the exact stuff I work through with business owners, tradies, manufacturers, service firms, who feel like they're constantly fighting fires their team has created, and they're stuck doing the jobs that should never have been theirs. And by the end, I'm going to give you a simple way to decide where your attention, focus, and energy must go, so you start working on the business, not drowning in it. Let's get into it. So, frame the game. Profit and cash flow are different, and you need both. Quick clarity. Profit and cash flow are cousins, not twins. Profit is what's left after expenses. Cash flow is timing, when money comes in versus when it goes out. A profitable business can still choke on cash flow if customers pay late, stock sits too long, or you're funding jobs up front. Too often, I've heard business owners relate that their daily motivation is directly impacted by the level of their daily bank balance. This is a completely wrong way to look at your business and serves no one. Remember, your bank balance is only a result of all of the actions you take in generating revenue and making a profit. Therefore, the actions you take will have a direct impact on the results that you achieve. Your bank balance has no direct impact on the results being achieved. So, my simple rule is this. Profit is the engine. Cash flow is the oxygen. No oxygen, the business stops. Now, here are the 5 levers. Lever number 1, pricing and positioning. Charge what you're worth and get paid like a professional. Some SME owners undercharge for one reason. They're afraid. Afraid of losing the customer, afraid of pushback, afraid they're not good enough. But if your pricing doesn't reflect value, your business becomes a charity with a logo. How this lever boosts profit. It's a small price improvement flows straight to the bottom line because your fixed costs don't rise at the same rate. And how this lever affects the cash flow is better pricing gives you margin to breathe. So you're not relying on next week's invoices to pay this week's wages. And the traits that you must adopt as a leader: firstly, confidence in the value or the business provides. Second, willingness to have adult conversations about price. And thirdly, discipline to stop discounting out of panic. So where do you need to apply your attention, focus and energy? 1, know your numbers, gross margin by products divided by the service line. 2, define your value anchors: speed, guarantee, quality, convenience, expertise. And 3, set a pricing rule: no discount without a trade-off. Include things like scope, time frame, inclusions. I worked with a trades business that hadn't increased prices in years. They were winning work, but every job felt like hard labour and stress. We reviewed the job costing and found the real issue. Their quoting was built on hope, not numbers. We implemented 3 changes: a standard margin built into every quote, a minimum job value, and a clear script for price objections. We're not the cheapest, and here's why. Within weeks, they didn't need more jobs, they needed better jobs. And the owner stopped spending nights catching up because the business finally had margin to support the team. So the practical action right now, and just pick one offer. Increase price by 3 to 7%, test and measure. Track your conversion rate plus gross margin plus cash collected. Lever number 2, margins and cost of delivery. Stop bleeding money in the work that you do every day. This is where profit is either protected or murdered quietly. Margin leaks come from supplier creep, prices rising and you absorb it, rework or callbacks, poor scheduling, scrap and waste, and one more thing, that is scoping creep. So the client's asking, just one more thing, can you do this for me? And then team inefficiencies. Think about it as productivity. What productivity improvements can you be making? So how this lever boosts profit is every dollar saved in cost is a dollar added to profit without selling anything extra. And how this lever boosts cash flow is improving margins means that you build cash reserves faster and you don't need cost and volume to survive. The traits that you must adopt here are operational discipline, know your numbers, have a zero tolerance attitude towards rework being accepted as being normal, and curiosity, where is that money leaking? So where to apply attention, focus and energy? Number 1 is job costing weekly, not monthly. Number 2, identifying the top 3 margin killers: materials, labour blowouts and rework. And 3, lock-in standards, checklists, scopes, sign-offs. I work with a small manufacturing client who told me, we can't make money unless we're flat out. When we mapped their process, we found rework and scrap were treated like being part of the job. So we implemented a pre-production checklist, a first of quality check, and a simple visual KPI board: scrap percent, rework hours, on-time delivery. They didn't need new machinery, they needed a system. And once waste dropped, profit went up without longer hours. So the practical action here is, this week, run a margin leak meeting with your team. Ask questions like, what causes rework? Where do jobs blow out? What's missing at handover? Then fix one root cause with a checklist. Next week, do the same thing again. Lever number 3, average transaction value. Make each customer worth more without more customers. If your business relies on constantly chasing new customers, you're stuck on a treadmill. Average transaction value is about bundles or packages, upgrades, premium options, service plans, add-ons that genuinely help the customer. So how does this lever boost profit? You increase revenue per customer with minimal extra cost, and the margin improves. How does this lever boost cash flow? If you bundle smartly, you can take deposits, stage payments, and reduce risk. The traits that you must adopt is intentional selling, problem solving, not pushy, and also being professional. confidence to recommend what's best, and then leadership that trains the team to sell with integrity. Where to apply attention, focus and energy is 1. Build a 3-tier offer: good, better, best. Add a next logical step on invoice and quote. And 3. Train your team on language most of our clients choose, for example. A service business that I was working with was quoting single jobs only. We designed packages: a standard, a priority response, a priority plus prevention plan. Same customer base, higher average sale, more predictability and less stress. The practical action is create one better type option today and add it to every quote for 30 days. Lever number 4, repeat business and retention. The cheapest lead is the one that you've already paid for. If you want stable cash flow, you need customers who come back and refer. Retention is a cash flow stabilizer because repeat customers buy faster, they trust more, they cost less to serve, and pay more reliably. So how does this lever boost profit? The lower acquisition cost and higher lifetime value. And how this lever boosts cash flow is more predictable revenue means fewer panic decisions and fewer discount to survive moments. So the traits you must adopt are consistency, follow through, and long-term thinking. Where to apply your retention, focus and energy is number 1, a simple follow-up system 48 hours after delivery and 30 days later. Number 2, a customer success cadence, monthly touches for key clients. And number 3, turn feedback into improvement, fast. A logistics company that I worked with had good service but no structured follow-up. We built a system rhythm: weekly service check-in email, monthly review call for top accounts, and a quarterly performance scorecard. Retention improved and the owner stopped hunting for new work every month just to stay afloat. So the practical action here is list your top 20 customers. Who haven't you spoken to in the last 60 days? And contact them. And book 5 check-in calls this week. Lever number 5, cash conversion cycle. Get paid faster, hold less stock, and stop funding your customers. This is the lever that most business owners ignore until it hurts. The cash conversion cycle equals how quickly you collect from customers, how long the stock sits on the shelf, and how you pay suppliers. If customers pay in 30 to 60 days, but you pay suppliers weekly, you're the bank. So how does this lever boost profit? It's less interest, fewer overdraft fees, and fewer emergency decisions, and less waste. How does this lever boost cash flow? It's obvious. You get cash in sooner and keep it longer. The traits that you must adopt is courage to enforce terms, professionalism in collections, and systems thinking. So where to apply your attention, focus and energy? Number 1, debtor days. Tighten invoicing and follow-ups. Number 2, deposits, progress payments. Stop funding jobs up front. Number 3, inventory discipline. Order to demand, not fear. Adopt the just-in-time principles. And number 4, supplier terms. Negotiate. Don't accept what they're offering. A client I worked with had a business with strong sales but constant cash stress. Their invoicing was late, follow-up was awkward, and the debtor days blew out. We implemented a cash flow rule set. Invoice within 24 hours, automated reminders at 3, 7 and 14 days, and a firm work pauses if overdue policy where appropriate, and taking deposits on larger jobs. The business didn't work longer hours, they simply stopped being the bank. So the practical action, and pick one of these: invoice within 24 hours, or add deposits, or implement a debtor call script and execute it for 14 days straight. Now here's what I want you to take away. Most owners don't have a time problem, they have a priority problem. So here's my simple filter for where your attention, energy and focus must go. If an action improves margin, cash collected, customer retention, systems that reduce rework, pricing confidence, it stays. If it's just noise, busy work, firefighting, fixing the same mistakes, then it needs a system, a standard or a delegation plan. Because systems create consistency, people create results. And if you want to stop working longer hours and start getting paid like the business owner you are, you need to pull the right levers in the right order with discipline. If you'd like help applying these 5 levers to your business, if you'd like to help applying these 5 levers to your business, your numbers, your team, your reality, book a meeting with me. I'll help you see the gaps, fix the chaos, and take back control. This is Phil Bajura, turning business dreams into reality. Oh, by the way, drop a comment which lever is your biggest issue right now: pricing, margins, average sale, retention, or getting paid faster. Drop it down below.